Hi, Tamal. Welcome to the Business Standard Banking Show. In your Bankers Trust column that you've written this week, you've talked about that RBI should come down on the practice of renting out the P2P license or the peer-to-peer license before it is too late. What are the concerns that you have and why?
It's not P2P financing. It's not P2P financing at all. It's something else. It's they're creating a pool of funds, and from that pool of funds, they are giving money. And I understand that even if money, some borrowers turn defaulters, it doesn't really, it's not affecting the lenders at this point of time, because the fresh inflow in terms of new lenders coming in, their money is used to pay back the old lenders, so on and so forth. And one of the ways it's doing it is this, the platforms, the P2P platforms are renting out their platform to other non-banking finance companies who have nothing to do in the name of outsourcing. But Reserve Bank of India norm does not allow this kind of outsourcing. So what's happening is, kind of, I would say it's a time bomb ticking away the asset liability mismatch we are allowing it to create. And we will get into big trouble. So which is why I said it is Reserve Bank of India, it's high time. I think it's tolerating enough. I think it should come down heavily. And this practice must be checked. I mean, you can't get away doing this. What is happening in India is not P2P, what a P2P marketplace is expected to do. P2P marketplace is a connecting link between a borrower and a lender. You can't have multiple borrowers taking money from them, create a pool of money, and from that pool you lend, and you make sure that borrower gets good interest rate. How can you have a fixed interest rate when it depends on the profile of the lenders? Who are you lending to? Yeah. So P2P platform is not expected to run its own balance sheet and manage a pool of funds. They are not fund managers.
The other thing, Tamal, that has been discussed in this show also before, but there have been so many reports, is around the attrition in private sector banks. What is happening there? Has the attrition gone up, and what is the reason behind it?
Because, the environment is changing. There are so many opportunities. It's not necessarily a banker is leaving to join another bank. There are many other entities, the fintechs and tech fins and various marketing organizations. A lot of other entities, they are wing the bankers. Because while the banks are turning into a technology companies, the other fintech and tech fins and various other organizations, they are looking for bankers, particularly at the mid and junior level, for their job. And if not anything else, there are people also leaving to start startups, which has never happened before. So it's a very difficult, very different time. The environment, the ecosystem, and the psychology of employees are changing. So it is the biggest challenge. I think there was a time when it used to happen that people are leaving and you offer he or she, him or her more money to retain her. But now we are seeing a situation where money cannot retain. I think they are looking for this generation, looking for challenges.
We have time for one more question, and we cannot let you go without talking about your thoughts on the upcoming monetary policy. What are you expecting the RBI to do?
Both US Federal Reserve and ECB, they have hiked their rates, 25 pips each. ECB has given a sense probably the next meeting can be sort of status quo, but there is no guarantee as such as far as the US Federal Reserve is concerned. Now, what's going to happen in India? I think Governor once said that it's a no-brainer. This is going to happen. So I would say it's like a no-brainer. It's a status quo, which means that the repo rate will be retained at 6.5, and even the stance of the policy, which is Ujjwala accommodation, also will remain. Absolutely, there is no change. Why is this? Till the last policy, we are pretty optimistic, pretty bullish. Of course, one part of the resilience and the strength of the financial system, financial sector stability, that continues to be. But the inflation front, what progress we made, I'm blaming on tomatoes, particularly the food inflation. Is pretty bad. May inflation was 4.25, which was to 25-month low. I'm talking about CPI inflation. And June, it went up to 4.81. As we speak, everybody and his aunt expecting July inflation to be more than 6%. And I think the rate cut, which was expected probably in the last quarter of this current financial year, probably delayed, it can spill over to the next financial year. Similarly, the change in the stance also, probably it will get delayed. So for the time being, it's status quo and a long pause. We have to wait for the stance to change and wait even longer for the first rate cut.
Well, Tamal, it's just a week away, so we are going to find out very soon. But yes, status quo on the policy seems to be the word on the street as well. Let's see what happens, and thank you so much for sharing your thoughts on all the other subjects today. We look forward to meeting you again next week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.